Hello, this is Eric Parnell, Chief Market Strategist from Great Valley Advisor Group. And today I'm here to talk to you about strange relationships that we see in the marketplace today and how they may inform our investment decisions over the next year and beyond. The first relationship that we'll look at today has to do with technology stocks and Bitcoin. And you may ask yourself, what do tech stocks and Bitcoin have to do with each other? Well, the reality of it is that there's two key factors. One, they're driven by excess liquidity that's in the marketplace. And two, they are quintessential speculators' instruments. What are we seeing with this relationship today? Going back to 2016, Bitcoin and technology stocks, as measured by the NASDAQ 100 index, have moved in lockstep with each other. But more recently, we have seen tech stocks move well beyond the price of Bitcoin. What does that tell us going forward? More likely than not, we should expect to see a pullback or at least a consolidation in technology stocks as they've been running hot the last few months. The second relationship that we'll take a look at has to do with gold prices and US Treasuries. And you may say, aren't these opposite instruments, one that's designed to hedge against inflation and the other that's designed to benefit from low and steady inflation? Well, that's true, but these assets are more defined by their identity of being safe haven instruments. They're places that investors go during times of economic and market uncertainty. So the fact that gold has held up so well and treasuries have fallen back so much over the last 2 years indicates that we're likely to see a convergence going forward. As inflation continues to come down, it's more likely than not that we'll see treasuries rise to catch up to the price of gold, which is now above $2,000 an ounce for only a few times in history we've seen that. The third relationship we'll take a look at has to do with the US stock market and lumber prices. One of the things that we know is that US stocks are driven by economic activity. And a key barometer showing economic activity is lumber prices, because we need lumber to build houses, and houses are a key driver of the economy. What are we seeing with this relationship today? Normally, lumber prices and the stock market, they move with high correlation in one another, but we've seen a meaningful deviation that's taken place in the aftermath of COVID. What should we expect going forward? It's more likely than not that lumber prices are likely to rise to catch up with the S&P 500, particularly with the housing shortage and the strength of the housing market that we've seen despite higher interest rates. These are just three of the many relationships that are worth following as we try to predict what the stock market and asset markets in general are likely to do going forward. I'd like to thank you for joining me for this latest Market Insight, and I look forward to seeing you again soon.